Hello there, Hector DeVille here. In this particular video we are going to be talking about continuation formations, alright? Price patterns, price or candlestick combinations that are going to indicate a continuation in the upcoming move, alright? Therefore, what we are going to be searching for here, if we have a level of support and resistance and we have a price coming back to retest that level, we are going to be searching not for a reversal, not for a breakout, but instead we are actually going to search in the upcoming move again for a continuation move. Obviously, any type of continuation candlestick formation begins with a breakout. First of all, we need to see a breakout. All right. Just this time around, on the next move, we are not gonna see a fake breakout. We are gonna see an actual breakout that, well, in fact, does pull through. And this continuation move is where we are gonna get our pips. All right, out of this continuation move, right after a valid breakout. All right, let's get going. Okay, well, I personally only trade 3 types of continuation patterns. Okay, obviously there are more than 3, but throughout the years I've kind of narrowed it all down. I just decided to narrow it down to the patterns that have been giving me the best win-loss ratio, the best degree of success in my trading, and since I believe that being selective with your setups is actually important, okay, it's always important to limit yourself to high quality setups. Well, I'm just gonna teach you the 3 most reliable continuation patterns that, again, in my experience, work the best. We have, first of all, the breakout congestion continuation pattern. Then we have the breakout pullback bounce, right? Breakout pullback bounce. And finally, we have the full swing reversal, all right? Full swing and then a reversal there. Obviously, they all must be based or located around, a significant level of support and resistance. You know already that. For the sake of simplicity, as in previous videos, I'm gonna be explaining these three formations, assuming we have a level of horizontal support and resistance. Okay, well, in this case, resistance, since price is coming from below, right? This blue line there is going to signify a level of a level of resistance on the daily, weekly, monthly, whatever. But obviously we will be able also to apply or to find these formations out of trend lines. For example, the breakout congestion continuation pattern, we can also find it on a trend line taking, this shape, a breakout candle, then that congestion bar, right? That congestion bar there, and from there we find the continuation pattern. All right, so you can also find it on trend lines. You can also find it on ranges. This is very, very typical. All right, price simply flapping sideways within 2 range boundaries, and whenever we are actually to search or to wait for the breakout, this is very common, guys. What we get is a momentum breakout candle, all right, the breakout candle, then a little bit of confusion, a little bit of hesitation, all right, and eventually, bang, the continuation candle. Okay, so like I say, out of ranges, this is a very common or typical formation out of or right off a range boundary immediately after the actual breakout. And actually, one of my favorite patterns, one that I trade over and over and over and over, and I always search for them because it's the one that, well, has been yielding the highest win-loss ratio in my trading for many years. Please pay attention here, guys. Flat top or flat bottom triangles. This is a flat bottom triangle. This is a flat top triangle. All right, let's, for example, assume a flat bottom triangle. What we see here is price bouncing or finding support, continuous support over one particular level, all right, the support level, but it gives us every consecutive swing, what we get is lower swing highs. All right, so price bottoms out at the same level. However, the swing highs are closer and closer and closer to that particular horizontal level. Effectively, what price is actually doing is building pressure up on that particular level. All right, this one here, the key support level there. All right, price swings closer and closer and closer into that particular level, and eventually, well, that level, that support level, just cannot hold the pressure anymore, and eventually, bang, gives us the breakout, then a little bit of congestion in the continuation pattern. This is the setup, the pattern, the price condition, the trading opportunity, however you want to call it, that's been given me recurrently, given me the highest win-loss ratio in my trading for many years. Please, guys, search for continuation breakouts out of flat top or flat bottom triangles. Conversely, a flat top triangle is something like this. All right. Price finds resistance of one specific level, keeps building pressure by scoring higher swing lows. All right, again, building pressure up on this particular level. Eventually, that level cannot hold price back anymore, and then we get that breakout, a little bit of either of a congestion or a pullback, such as in here. We can find both types of price formations right above that breakout point. All right, and from there we get the continuation, and that's where you make your pips. All right, again, I'm gonna, for the sake of simplicity, explain this strategy out of a horizontal level of support and resistance, but you can find it no matter whatever shape that particular level of support and resistance looks like. Okay, all right, let's get started. All right, let's dig into the breakout congestion continuation pattern. As you can see, it's a 3-bar combination pattern, all right? A 3-bar candlestick formation made up by the breakout candle, then the congestion, and then the continuation. Well, let's go one by one. The breakout candle, the trick here is to see a full breakout candle, all right? Now we don't want to see any type of pin bars, all right? Now we don't want to see no spinning top, no inside bar, none of that. We want to see a massive, solid momentum breakout. Okay, again, the idea here is trading volume. You want that breakout to happen in trading volume. And how do you identify that trading volume? Well, again, by the nature of the pattern, of the candle in itself. The idea here is that the body of the candle, it's the most significant part of the candle in itself. Very short wicks, both up and down. All right. This is going to be a long wick where the body makes up at least 70 or 80% of the total length of the candle. Again, the longer, the more solid, the smaller the wicks, the better. All right. The idea here is that the market as a whole recognizes that this is the time to break through that particular level of support and resistance, and as a result, what we get, bang, is no hesitation on the breakout in itself. The more solid, the more confident the breakout is, the higher the chances are that the continuation is going to be just as solid. As I'm going to explain in a minute, usually more often than not, the continuation bar is related to the actual breakout bar. The longer or the stronger the breakout is, the stronger the continuation is going to be. And as you know, we are going to make our pips, our profits out of the continuation part of this pattern. Okay, so again, in order to get a solid continuation bar, we need to see a solid breakout bar. Now, step number 2, the congestion. All right, the congestion, that's the small bar, the small spinning top, perhaps even a doji, all right, that we like to see right after the congestion. Why do we want to see that little bit of a congestion after the breakout? In order to have a sound money management entry, or a sound entry from a money management point of view. The thing is that since this is, this is a part-time trading strategy, and a strategy that you want to trade in only 20 minutes a day, and obviously at the end of the day, meaning that you need this congestion area this congestion candle to actually close, well, we're going to be basing our entry around that congestion area, and therefore we want, or we require, a small candle, so we can place our entry 5 pips above the tip of that congestion area, of that congestion candle, and the stop loss 5 pips below the low of that particular candle. Again, if we have a long candle here, all right, if this was not small hesitation or congestion candle, but instead what we have is a long candle, well, from a money management point of view, that will not be an entry you want to take, because that would be your entry, and your stop loss would be either down here or at the most at the 50% or right below the 50% of that entire range, and therefore the distance between your entry and your stop loss would be far too great to make it worthwhile, again, from a money management point of view. So you want to see that congestion area after the breakout in order to base your entry around that candle. Now, it's very important, and I cannot stress I cannot stress this enough, guys. It's very important that congestion area takes place on the other side of that particular level of support and resistance. Basically, that congestion area needs to be beyond the breakout point, this being the breakout level. All right, breakout point there. Well, you want, if price was coming from below and therefore the breakout happens to the upside, you want that little congestion bar to take place above that particular level of support and resistance. Obviously, on the other hand, if you had a level of support and then you saw a solid breakout to the downside, this would be a red bar, obviously. Well, you want to see that small candle below that level of support and resistance, basically below breakout points. Okay, at any rate, you want the congestion bar to happen at the right side of that level of support and resistance to identify that the market is remaining above that level. We don't want price to dive back to dive down back below that particular level of support and resistance. Okay, you want price at any rate to remain beyond breakout points. Okay, and from there, well, the continuation bar. Right, the continuation bar is going to be our trigger bar. We want the continuation bar to be the one triggering our entry again, right then, right, 5 pips above the tip, the high of that congestion bar, and you want it to happen immediately after this congestion bar. So you don't want a spinning top, then another spinning top, then maybe a pullback or a some sort of a hammer there. You don't want too much hesitation beyond the breakout point. Again, this is a momentum filled breakout. We require momentum here, guys, and in order to verify that momentum, the entry needs to take very short time before it becomes effective. Before, on a previous video, we were talking about sandwiches bars here. Well, you don't want too many sandwiches bars. We are going to give the market just one sandwich bar in order to locate our entry around that point. All right, so to sum it up, after the congestion bar, once you've placed your buy stop order and your sell stop order, you want that buy order to get triggered immediately after. And well, from that point on, you know how to manage the trade. At the close of the trigger chart, you close 50% of the trade, right? 50% of the trade, and then you let the trade running. You obviously trail your stop loss up to break even, okay? And then you let the remaining 50% of the trade until the close of the next candle. Again, waiting for a second push in the direction of the breakout. Statistically wise, in my experience, once you see, if you see a momentum breakout, again, that's very important, well, you usually see momentum enough for 2 consecutive pushes in the direction of that breakout. All right, so again, you close a portion of the trade there, you wait for the next candle, which is usually a little bit smaller than the first continuation bar, and you close the second portion of the remaining portion of the trade at the close of that second candle. All right, you know already about that. That's similar to reversal formations in the way of taking out your profits or closing out your trade for profits. So I'm not gonna spend any further time explaining that. All right. All right, let's now move on into the second formation, the breakout pullback bounce formation. In its nature, it's rather similar to this one, but it takes a different visual aspect, so to speak. The difference here is that the breakout candle has driven price too far from breakout points, and from there we need to see a little bit of a pullback. Okay, here we don't see a pullback. What we get is simply a breakout, a horizontal move, and then the continuation pattern, the continuation push, so to speak. All right, in here, in the breakout pullback bounce pattern, what we see actually is the breakout, the pullback, and from there, well, the bounce. All right, again, the difference here is that this on this first example, price has not been driven too far from breakout levels, and then we don't require any pullback whatsoever, just a little bit of a hesitation to base our entry around that level. All right, this time around, on occasion, the momentum just happens in so much momentum, all right, so much trading volume, that by the time this breakout candle closes, price is simply too far away from breakout point to get or to trigger any entry around there that's worth it from a money management point of view. Again, if we base our entry around that first candle, we would be too far away from breakout levels, which at the end of the day, more or less is where we want to locate our stop loss. If you see on this first example, you will notice how our stop loss is usually immediately below breakout levels. All right. Well, if we place our stop loss there and our entry there, this stop loss is kind of floating in the middle of nowhere. All right, and that's not an ideal location. Chances are you will have your stop loss hit quite a number of times. Please remember that I am only explaining high quality trading signals here. Again, I am a firm believer in only picking high quality setups. So the requirement here is to see usually 2 or 3 candles pulling back to breakout levels. Again, here we didn't pull back to breakout levels, we were just seeing a little bit of hesitation around breakout levels before the breakout. Here we do require a little bit of a pullback to drive price back down to breakout levels, and from there, that's where we are gonna be waiting for price to for our entry. All right. So, again, heavy breakout. We also want to be a solid, full body candle where the body is, or where the candle is made up at least by 70 or 80% of the total length of the candle by the actual body in itself. All right, so full momentum breakout. Then one candle is not quite enough to retest breakout points. Second candle, as you can see, not quite enough to retest breakout point, and then we see the finally price comes back down to retest that breakout point from above. All right, from above. This pullback, in my experience, usually needs or requires 2 or sometimes 3 different bars. All right. Obviously, if the breakout is a green bar, well, the pullbacks by definition need to be red colored. Okay, but like I say, 2 or 3 candles is usually the norm here. Right? This final candle, the one retesting breakout levels, doesn't quite matter whether it's a green or a red candle. Same as in here. So that's why I've colored it in gray, because the coloring itself doesn't really matter. These two, obviously, if price is pulling back down, they will be red, okay, again, by definition of a pullback. And then this third candle, which is the one that's is going to help us to base our entry around that, as you probably can guess already, that's going to be our entry and that's going to be our stop loss. Well, this one can be either green, red. Ideally, that would be a green candle. How is that? Well, to signify that up on the breakout and up on the pullback, price is already beginning to bounce. That's why the bounce is the final component of this entire formation, right? So ideally, this would be already a green candle, identifying that price is beginning to bounce already. Now, at this point, you can expect two different types of bars to signify that pullback. All right, either a spinning top or a congestion bar, same as in here, or a pin bar. Right, with a little bit of a fake breakout. I know this is going to be a continuation formation, guys, but in my experience, we usually see quite a bit of times, okay, occasionally, we do see indeed a little bit of a fake breakout in the shape of a pin bar or hammer bar. All right, so you can get, once price comes to retest that level, you can get either a spinning top or a pin bar. If it's a spinning top, that would be our entry, that would be our stop loss. Okay, and obviously we expect the next bar to be a continuation bar. Okay, in the other hand, if you get a hammer, that will be our entry, and our stop loss is going to be 50% or right below 50% of the entire range, somewhere around there. All right, somewhere around there. And again, you are not going to get both of them. I want to make this very clear. You're not going to get both in a row. Okay, I don't want you guys to think that. You are going to actually get one or two. One or the other, either a spinning top or a hammer or a pin bar, however you want to call it, right off that retesting level. Okay, we are going to be retesting breakout points. If you get a spinning top, again, entry, stop loss, first push, close 50% of the trade, second push, close the remaining portion of the trade. If in the other hand, let me drive this all the way up there to get it out of the way, and let me put the pin bar there. If you get a pin bar,